again, my name is Eric Thompson. I'll be your guide as we go through this today. So this is called Property Tax Notification 101. You will learn all about this. You also learn on why we're doing this now. It's kind of ironic that this should be tax day that we're doing this webinar about property tax notification. Today's April 15th, but it turns out this year it's not tax day. It's kind of funny. Anyway, so we're going to go all into your property tax notification that you will be getting soon. If it's okay with you, I want to tell you something that we're really excited about and something that's going to be a great resource for you. No, it's not just the fact that we have a new billboard, even though we are excited about that. What we're really excited about is the fact that we have a podcast. So this is obviously an image where we're promoting our podcast. We encourage all of you to check out our brand new podcast. It's called coloradolivingpodcast.com. It's going to have a whole variety of resources for you. So as it says there, it's real, raw, authentic real estate insights, all about the Front Range of Colorado. Go check it out. There are now 2 episodes that are loaded onto the site. We just launched this a few days ago, and we'll be having some great interviews, some great insights about what's happening in the market. We'll be telling stories, all designed to bring you even more clarity about what's happening in the Front Range real estate market so that you can make some really, really good decisions. Okay, speaking of being helpful, speaking of real estate insights and information, here's the thing. In the next few weeks, you will be getting in the mail a postcard that looks a lot like the one you're seeing on the screen. So I just happened to grab a Larimer County version, but you will get it from your county. So whether you live in Douglas County or Jefferson County or Larimer County or Weld County, Boulder County, wherever it is, you are going to get a notification in the mail from your county that says, guess what? Here it is. This is your new property's valuation based on your county's assessor and their conclusion as to the value of your property. You will be notified of that with this postcard. You need to be on the lookout for that because those will land in your mailbox on or about the 1st of May. And the thing is, you're going to have questions. So this happens every other year. And usually when these go out, this naturally prompts questions. You know, it prompts expected questions like, that's interesting that they would think my property is worth this much. I thought it would be worth more, and I actually thought it may be worth less. I'm not really sure about how they came up with this. I'm not sure about the value. You likely will have questions. We can help. Okay, we are here to help you when you do get this notification in the mail. It's just how we view ourselves here at Windermere Real Estate. We are a resource for you for all things real estate related. We are here to help you out, and we want this webinar to be the first part of helping you out because we're going to bring a lot of clarity to the whole process and also what all this means. When you get this postcard in the mail, it's likely that you may feel like this, all right? So all I did is I Googled confused and found this image and thought it would be fun to share. So sometimes this makes you feel confused when you get it. Again, you may look at that and say, whoa, time out. I'm reading all these stories. I'm hearing all these stories. I'm seeing all this news about how property prices are appreciating. I thought that my property would be worth much more than what the county is telling me. Maybe you think the opposite. Maybe you're saying, geez, there's no way that my property is worth that much as I may like to think that it's worth that much. There's no way it's worth that much, and I certainly don't want to pay taxes on that much. That may be confusing to you. It may be confusing when you start to visit with your neighbors, when you ask them, well, what did the county say about your property, and versus what they thought about your own property. It may be vastly different. That may be confusing. So a natural reaction to all of this is a feeling of being confused. We don't want you to be confused. We want you to be clear. So we are here to bring some clarity to this. Here is a big, big deal in today's market. And this is different than how this normally goes. So what we are accustomed to is helping clients through this process every other year. You'll see why we do this every other year. We're accustomed to this, and what we're mostly accustomed to is clients saying, whoa, time out, this county is saying that my property is worth this. I don't think so. I think my property is actually worth this, and I certainly don't want to pay taxes on this amount. I want to pay taxes on this amount because this right here is what I think my property is actually worth. Well, what's very different this year, again, because of the stories that you're reading, the stories that you're hearing, the news that you're seeing, the data and insights and research you're getting from us. You're listening to our chief economist, Matthew Gardner. You're receiving our newsletter. You're getting our email newsletter. You're talking to our realtors here in our company. You're hearing about what the market is doing. And when you see this value from the county, it is very likely that they will be here and your mindset will be here. So you may have a mindset that your home is like the one on the right in this image, where the county is saying, no, it's more like the one on the left. And this is kind of in reverse of what we're accustomed to. So we're gonna bring some clarity to this factor as well. We're gonna tell you why that is. And here is the bottom line though, the thing that you need to understand. Your property is very likely to be worth more, even much more, than the value you are seeing in the county's new assessment. All right, so please understand that. The value that your property is worth here in April of 2021, in the spring of 2021, is likely to be much more than the value that your assessor believes that it is. And there's a reason why that we're going to walk you through right here in this webinar, but please understand that. So don't take the assessor's notification to mean that that is what your home is worth today, that is what it would sell for today. No. So what we can help you with is both the assessor assessment and looking at that and even debating that with the assessor, right? Even protesting that. We can help you with that. And in addition, we can show you what your home is actually worth in today's market. Those are two very different things. We're going to show you why that is. So why are we doing this now? Why are we doing this in the year 2021? Well, it's really simple. This is something that happens every other year, all right? So every other year on odd years, the counties send out the new assessment, and that's the value that's used for 2 years. So that's why we're doing this now in 2021, because it's an odd year. Okay, so here's what we're gonna cover as we go through this webinar together. What we're gonna cover is the actual valuation process. We think it's helpful for you to understand what the process looks like. You may be curious to know, well, how do they come up with this in the first place? What information are they using? You're gonna see how that works. We're gonna see what it means to you specifically, and so you understand that. And then we will show you how to protest your value and how that works if you want to. You may choose to protest, you may not. You may still have questions about this even though you don't want to protest. So again, we are here to help in any case. Our role, our mission is to be a resource to you, be of value to you, help you to have clarity about all things real estate related. That's what we're here to do. So please reach out if you have questions once you get that notification. Some fun facts about Colorado property tax we think is worth noting, worth talking about. There's some noteworthy things here when we talk about some fun facts related to Colorado property tax. Did you know that Colorado has the third lowest effective property tax rate in the whole country? It's really interesting. So I think those people kind of like me, I'm a Colorado native, those of us who have been here a long time may start to take this for granted or may not even completely understand the fact that our property taxes are very low compared to other places around the country. And what we notice is people moving here from other places, they're so often pleasantly surprised by how low our property taxes are. So we have the third lowest effective rate in the whole country. You may be wondering, well, who's the highest? The highest is New Jersey. The highest is New Jersey. The lowest, the place with the lowest effective tax rate in the country is, of all places, Hawaii, right? So Hawaii has the lowest rate effectively. New Jersey has the highest rate effectively. We sit there as the third lowest, which when you look at it as an effective property tax rate, it's 0.51%. So just a good rule of thumb is to look at the value of a property, multiply that by 0.5%, you're getting pretty close to what the property taxes are going to be. So when we work with buyers who are moving here from out of state and they're wondering about our property taxes, they're wondering what their taxes would be, what we use is that rule of thumb. We take 0.5% times the value. That gives someone a good start, a good idea of what their taxes are going to be. We will get to in a couple more slides. I will show you the exact calculation that's used to come up with taxes, but that is the effective tax rate that gives you the ability to just kind of have a rule of thumb. The average property tax bill for a Colorado residential property tax owner is just under $2,500, right? So $2,471 is the average property tax bill if you live in Colorado. Okay, so here's what you need to know. Here's everything you need to know as it relates to what happens every other year and the new valuation and the new assessment and the postcard you're going to get in the mail and the protests, etc. The first thing you need to know is how your property taxes work and specifically what they pay for, right? So just a good reminder, just that we find this to be interesting to remind people that your local property taxes, your county property taxes, it pays for schools, police, fire, library, local roads, and other local services. All right, so there you have a school district, a police district, a fire district, a library district, right? All those things are part of your local property taxes. So all the revenue from property taxes, it actually stays within the county. All right, so all that revenue, it stays right there locally within the county. And one thing that's interesting is that property taxes, it doesn't fund anything at the state level. State level services are funded in different ways. These local services are funded through property tax. If you live in a special metro district, that would be something else that would live up there in that first bullet point. You're getting services locally through that local district, right? So all those things listed there in the first bullet, those are all districts. Okay, so this is how property taxes work. All right, this is specifically how they work. We talked about the effective rate of being about 0.5%, 0.51%. This is how it works specifically. So you take the value that the assessor determines, multiplied by an assessment rate. I'll tell you what that is. I'll tell you what that means in a moment. And what you come up with is the assessed value. So it's that valuation that the county determines multiplied by an assessment rate that fluctuates a little bit every other year, and you end up with an assessed value. So then you take that assessed value multiplied by a mill levy, then you end up with the actual levied tax. Now the shortcut to all this, again, is it's about 0.5%, so it's 0.51%. If you're looking at a property in Colorado, by the way, that's not within a special metro district, that rule of thumb works. And what we're talking about here in this webinar is the value, right? So the first part of this whole equation, the first part of this formula is what is the value that your assessor is saying that your property is worth. That's what we're talking about, and that's what you're going to get in the mail. So of course that's going to influence the whole way through. That's going to determine what you're going to pay as a levied tax. So we're here talking about the value. So here's an example, all right? So here are the numbers on how this works. So let's pretend we're talking about a home that's valued at $500,000. Let's just do $500,000 for easy math. And that's in many places along the Front Range, that's about now the average price, multiplied by that assessment rate of 7.15%. That 7.15% is determined by the Colorado legislature. They vote on that. And that is the percentage that is used here in 2021. So they take that 500,000 multiplied by the 7.15%. So that's a number that can fluctuate a little bit depending on what the state legislature decides. So doing that math, you come up with $35,750 is the assessed value. So then you take that assessed value multiplied by the mill levy. Now I'm using 76 mills as an example, but that's a very realistic example. When you look at your specific property tax bill, what you notice are all those districts are laid out, right? They're all itemized. Item by item, you can see what the fire district is, what the library district is, what the school district is. If you do have a special metro district, right, that's its own thing. Each of those have a specific mill levy that's attached to it. So in this example, if you were to add up the mill levies for all those specific items, what you come up with is 76, all right? So what that means is 0.076%. So you take 35,750 times 76 mills, what you come up with is $2,717. Again, the shortcut version, the rule of thumb is about 0.5%. So you can see that's roughly 0.5%. And so that 0.5% gets you in the ballpark. That's how that works. So the 7.15% determined by the state, the specific mills determined by your local county, and those specific services that are offered, you can see those in your own personal property tax bill. And I should remind everyone that if you have questions, you're welcome to ask them. What you can do is you can just type them in. I'm happy to field those questions, and we will definitely be taking some questions at the end. So we have time saved for that. And as you see me look away, I'm just looking over at the window where questions would come up and just making sure we don't have any. It looks good. Okay, here we go. The next part of this. So your property's value. So your property's value is reassessed every 2 years, like we mentioned. So 2021 is one of those years. By statute, your county uses a market approach to value. All right, so by statute, that's what they're going to use in terms of how do they come up with the value. They use a market approach. What that means is this, it's based on comparables, right? So all that means is it's based on comparable sales. So they have algorithms, they have formulas they use looking at comparable sales. That's how they come up with the value. Here's the reality. I'm going to show you the reality. So even though their approach is formulaic and there's science behind it, I'm going to show you the reality. A little warning, you're about to see a screenshot of a spreadsheet. There are about to be all kinds of numbers on the page, but I'm going to walk you through what's happening. So just get ready. So there you go. Here's the reality. Now let me tell you specifically what you see here on the screen. Specifically, this is research that we did. This is help that we gave to a specific client who lived in a neighborhood. Obviously, they lived in a neighborhood. These are all the properties in that neighborhood that were immediately surrounding that particular home. This column here, so first column is addresses, second column is the original valuation that was done by the county. That's this column here. This is what the valuation was. And then this column is the new valuation, all right? So the county came out with their new valuation. They said it was worth this column, now it's worth this column. And so then property by property, we can see the difference, all right? So this is the change in valuation. It was this, now it's this is the change. Isn't it interesting to look at the difference and look at the fluctuation, the variety of change here? So you're saying, let me get this straight. In the same neighborhood, some of these properties went up 100,000. Here's one, 105,000, 133,000. Here's one down here, 213,000. That happened, and properties went down in value, 45,000, 5,000. Here's one that went down 74,000. How can that be? Well, those are good questions, all right? Really, really good questions that we don't have good answers to because we don't, we're not the one doing this valuation. But what we can do is help you to put a more realistic number here in what your property is actually worth. All right. So here we go. And so we're going to get into how we can specifically help. But our point here on this slide is just to know that even though there's science to this, and in all respect to the counties and how they go about this is not an easy task. All respect to them, the results can kind of be all over the place. And this can cause the confusion, especially if you're visiting with your neighbors. So imagine this neighbor, their property went up 133,000 almost, visiting with this neighbor who went down 54,000. Both of them will be very confused, and that's where we can help, all right? So that's where we can help put a more realistic number to this column. Okay, so the comparable sales. Here's what you need to know about the comparable sales that the county is using. And this is by statute. They have to follow these rules. This is how they do it every time. So they use 2 years worth of data, meaning that they're going to look at a 2-year window of actual sales, and they look at properties that sold between July 1st, 2018 and June 30th, 2020. Now, this bullet just sitting here is the the second bullet on this slide. This second bullet is a big, big deal. And it ties all the way back to what we talked talked about at the beginning, where it's so likely that your belief on what your home is actually worth is going to be very different than the county's belief. And not just belief, but what your home is actually worth today is likely to be much more than what the county is saying because of the second bullet, because they can only use sales up until June 30th, 2020 as a comparable. We would all agree, we would all tell you, and I would say even if you're kind of just a passive follower of Front Range real estate, you know that the market today is vastly different than it was in June 30th, 2020. What we will tell you, the market today is vastly different than it was on February the 28th of 2021. It's even vastly different than it was a month ago. This market is moving at rapid speed, values increasing at a very rapid pace. So that's why there's likely a big difference between your home's actual value today and what the county is saying, and we can help you with both, all right? So we can look at the data between July 1st, 2018 and June 30th, 2020 to help you with the protest, and in addition, we can help you and show you what your home is worth today given the state of today's market. All right, so this is a big deal. By the way, a couple of you typed in a question, the questions I'm seeing so far are going to be really good for the end. So not ignoring those, I do see those questions, so I'll get to those at the end. All right, so again, here are the comparable sales. This is the window. Isn't it interesting to look at this on just on a calendar? So it goes from July 1, 2018 out to June 30, 2020. And the last time we did this, they went all the way up until June 30, 2018, all right? So this is like the rolling 2-year window of comparable sales. So they're only looking at properties that sold within this window when they're determining the worth and the value of your property. Okay, so here's about the protest process. Again, if you believe that your property using that time frame is different than, is lower than what the county is saying, this is what the protest process looks like. All right, if you disagree with the assessed value, you can protest, all right? So you're allowed to do that. You can protest either online or in writing, either one, and it's really easy to get that information online and see how your particular county works. We are here also to help with that, so we become experts in each of the markets, in each of the counties where we serve. We know exactly how that protest process works, so we can help you with that. The deadline, regardless of the county that you live in, the deadline to protest is June the 1st. So again, you're going to get that postcard, you'll get that piece of mail with the new valuation on or about the 1st of May. You're going to have up until June 1st to protest. So this is what it looks like on a calendar. You will receive that postcard again with the new valuation in the very early part of May. You can see there in red, the protest deadline is June the 1st. So you have all that time to consider the valuation, to consult with us, to have us do the research, for us to look into the county's valuation versus our professional research and our professional opinion. You're going to make a decision if you would like to protest. If you do protest, by the end of June, by June the 30th, the county has to respond to you. That's their deadline to respond to you with what's called a notice of determination. Pretty straightforward. That's when the county says to you, basically, we agree with your protest or we don't agree. What I'll tell you is that we have really good track record of success. We've done a really good job. There are many success stories where we've been able to help people protest their value and get a lower determination. We can't help that. Of course, we can't guarantee that, but we have certainly been able to help. At least we've been able to help in so many cases, bring a lot of clarity to the whole thing. Now, one thing I'll tell you as well, when you get the notice of determination back, if you still don't agree, there is a whole appeal process as well, and we can help you with that. So if you do hit that point, if that is something that you want to do, we can help you with that kind of on a case-by-case basis. Happy to do that. That's not very common, and so we won't go fully into the appeal process here in this webinar just because we don't believe it'd be relevant to so many of you, but just know we are here to help with that. We can help with the appeal process. Okay, so that's the timing, that's how this works. You get in early May, the postcard with the new valuation. You have until June 1st to protest that if you want to. the county has until June 30th to get back to you with a notice of determination. Again, it's likely that they'll come back to you with a lower amount. So here are the big questions, and really the big question that you have: what's my home worth? All right, so this all begs the question, what is my home worth? Guess what? We can help you with that, right? So we can help you with that valuation. All of the experts here, all the professionals here at Windermere Real Estate, we're all full-time realtors. We do this full-time for a living. There's no one here as a hobbyist or kind of a part-time realtor. We're all full into this business, and this is what you're going to need. If you do want to protest, this is what you will need. This is very simple, straightforward. The county will require that you show them comparable sales in that time frame, right? So we need comparable sales between July 1st, 2018 and June 30th, 2020. We can only use sales during that time, and they're going to want, in addition to that, a market analysis, all right? So this is something we do all the time. We do it all the time, of course, for people who are getting ready to sell their property. We do it all the time also for people who aren't thinking about selling their property, but they're just curious, right? They're just curious to know what their home is worth. We view it kind of like a statement, right? You get your bank statement, your credit card statement, you get your investment account statement. We view it like your real estate statement. So we're always happy to provide these for you to show you what's happening in the market and what your home is worth. And we'll create one for you that you can use for your county's protest, all right? So we will do the research on the comparable sales. We'll look at that time frame, look at what's sold that would absolutely compare to your home, and then we will make the market analysis. What we do is we look at your home as if it was June the 30th of 2020. We say, okay, if the property was being sold then, if it was being valued on June 30th, 2020, how would we value that home based on these comparable sales? We will help you, right? So then you just take this information that we provide for you and you submit it to the county using their in writing process or their online process. It's really easy. We'll walk you through that. So you need to know also, in case you're wondering about, well, maybe I can just go to Zillow. This is different than Zillow. It's different than Zillow in that Zillow is also using an algorithm. It's not a human being looking at specifically what's going on in the market, understanding all the nuances and the specific influencers of your value based on your specific location, your specific neighborhood. You know, no algorithm can understand that. Only a human being can understand that. And so that's why this is different than maybe Zillow. So you may be tempted to go on Zillow to see how your valuation compares to this estimate. That's perfectly fine. It's all good. It's a good place to start. But also reach out to us because we can take that many levels deeper and help you to really understand what's happening in your specific market. All right, so here's what to do next. Here's what you want to do next. Just watch for that notice of valuation to come in the mail. If you question the value, just contact us, right? If you have questions about what the county said, reach out. We're happy to help. And then you can ask us to research those comparables and then create a market analysis. And then you may decide not to protest. You may say, geez, based on what the county's saying, I think it's pretty accurate. I think that's right. I think I'm okay with that value. And that's fine too. We're happy to do that work, even if you don't decide to protest. And one thing we will do in addition, just to bring awareness to you and bring some clarity to you, we'll show you what your home is worth today as well. So it's kind of two things. You get evaluation as if it was June the 30th, 2020, and evaluation as if it was today, even if you're not thinking about selling anytime soon. We're happy to do that. We find that it's very helpful. Okay, now, my friends, this is a time to ask your question. So I hope so far that was good and helpful for you. Now's the time for questions. So if you do have a question, all you have to do is just type it in. You should see right there on your screen the ability to use the GoToWebinar question function. So those questions show up here on my screen, and I'm happy to answer those. All right, so we had a really good question. Mark is asking about Larimer County mill levies, and he asked, why did I use 76 mills in my example? I just use it as an example. All right, so we have many people on here from all kinds of different counties, all kinds of different parts of the state, all up and down the Front Range, Douglas County, Jefferson County, Boulder County, Weld County, et cetera. So I use 76 mills just as an example. I think that's a realistic mill levy. and he's asking, are the mill levies expected to decrease significantly in 2021? Really, we'd have to research the specific county, and each county is going to vary a little bit based on the services that they want to provide, right? So each county goes through their own budgeting process to look at what the dollars that they need to fund the resources that they want to provide. And we'd have to, and we're happy to help you with that as well. If you do want our help kind of digging in, looking county by county, just let us know. I just use that 76 mills just as an example because there's a variety all up and down the Front Range. So a great question, Mark. Thank you. Hopefully that's helpful. Let's see, other questions. Tell me what other questions you have. I'm going to take a quick sip of water. I'd be curious too if you can type in if you've had success doing this, if maybe we've helped you in the past, and it's something we really enjoy doing. Absolutely. So let's see, I'm not seeing other questions so far. There are a lot of you here on live, I can tell, and gosh, all of you live, I'm happy to answer any question that you may have about all of this. Let's see, Tammy's asking a question. Please explain MLO. I'm not sure, Tammy, what that stands for. Can you help me with that? MLO. Tammy asked that question. I'm not sure what that stands for. I apologize. Sorry about that. I'm not sure what that means. Other questions? When you see me looking away, I'm just looking down here at my a mill levy override. I'm not sure what that means. A mill levy override. I'm not sure what a mill levy override is. Happy to do that research for you, though. Super happy to. I apologize. I have not heard of what that is. Apologies. Let's see. Okay, everyone. I'm not seeing other questions. Tammy, happy to follow up with you on the question that you sent in. Happy to do that. We will research that and get back to you. And everyone else, gosh, thank you so much again for being a part of this podcast. I hope that it was helpful. Again, I ask you and encourage you, please check out our podcast. We're pretty excited about it, and we're happy to launch it. And feel free to check that out. ColoradoLivingPodcast.com. Again, we have 2 new episodes up. And everyone, thank you so much for being a part of this and engaging with us. And look forward to seeing you in our next webinar. Take care.